Welcome, everyone. I'm Brian Love, head of Banking and Fintech at Travillian. Travillian specializes in executive search, talent advisory, succession planning for financial institutions all over the country. Here on Travillian Next today, I'm joined with actually, I guess, a longtime friend. We've talked to each other for several years. The president and CEO of DFCU Financial, Mr. Ryan Goldberg. Welcome, Ryan.
Hey Brian, it's good to see you. I think it's actually been 6 years that you and I have been talking about it. It's gone by quick, but it's great to be with you.
Is that like bank years, like dog years? Like it feels like one, but it's six. Um, but I guess you're also a relatively young executive in the space and you've also moved from banking to the credit union world. So I wanted to dive in. I thought you have a very interesting rise in your career in financial services. So maybe you can quickly introduce us and give us a little insight into that career trajectory.
Sure. So you hit the nail on the head. Been in the credit union space about 3 years. So I succeeded Mark Schob, who was my predecessor, who ran the credit union here at DFCU Financial for 22 years. And my background prior to that was all commercial banking, publicly traded companies. Spent the vast majority of my career in Florida, specifically with Regions Bank. Actually spent 25 years in total with that organization. About 20 years in Florida between Tampa Bay and Southwest Florida, and then spent the last 5 years of my Regions tenure leading two of our business lines, our small business group and our mass affluent group in Birmingham. And then post that, I've done a couple things in the Midwest. So led retail banking for Flagstar for a couple years, and then was the chief revenue officer at Alerus Financial in Minneapolis for a couple years as well. But this is my first entry into the credit union space, as you mentioned, and real pleased to be here.
Yeah, well, so man, there's so many things here. You went from the biggest of banks, well, not the biggest, but one of the bigger banks in the country, to a smaller community bank, which really is not a small community bank. It was, what, 20, 30 billion when you were there at Flagstar, to Alerus, which is under 10 billion. So that's actually an interesting thing to explore. Now looking back on moving down the asset size scale, how did you acclimate to that?
I think what was interesting was the ability to take the learnings from Regions and apply those to the different organizations, because from a timing perspective, those were really good fits from a career standpoint. When I joined Flagstar, we were just in the process of doing the biggest branch acquisition that they had ever done in their history. And that was purchasing 52 branches from Wells Fargo throughout Michigan and Indiana, part of Wisconsin, part of Ohio. So many of the skills and things that I developed at Regions were very applicable to coming into a spot, and hit them just really at the right time when they were looking for some enhanced retail banking leadership. And the experiences I had, I think, were quite relevant. Same type of thing with Alerus. So it's really not been so much of a focus on the size of the organization, but it's been where it is in the continuum. Where are they looking to grow? What types of things are they wanting to introduce around people and process? So it was really taking that foundational experience and then being able to deploy it into a different banking organization, which is what we were successful in doing.
Yeah, and I guess as I'm thinking about it, when we do executive search for our community bank clients, Ryan, sometimes we have to do a little extra vetting when we go way upstream to larger asset size banks. However, if you're a community bank and you're striving to get to the size of a Flagstar or whatever it might be, you need to look at Flagstar, right? You need to look at those. And I guess Flagstar maybe was trying to be like Regions. So that's how they look to you. The other piece here that's also not lost upon me is you were in the Southeast for a long time, in the beautiful, sunny Southeast. I can see the little crack out of your window. You're in Michigan. I'm in Pennsylvania. The trees are bare. It's 25 degrees outside. Why the heck are you not back down in the Southeast?
Well, I can tell you that my travel pattern going from Southwest Florida to Birmingham to Michigan and Minnesota, the traffic has not been going my direction. So, but the reality is, any move that I've made in my career that's required relocation, and there's been probably almost a half a dozen of them. They've all been opportunistic moves. They've all been for the career enhancement to take advantage of an opportunity that was presented itself. Specifically now, the vast majority of the assets and the income coming from DFCU Financial is coming out of our Michigan operation. We now, with our third transaction that we announced a couple of weeks ago, will have well over $1 billion in Florida assets, but the company in totality is really going to be pushing about 8 billion at the end of that transaction. So this is a headquarters. This is where the vast majority of people are employed and where the biggest part of the business is right now. So it makes sense for the CEO to be here at the headquarters. But having said that, I know exactly the times a year that I'm going to be wanting to spend more time in Florida with our team down there.
Yeah, maybe quickly approaching. And we'll get into DFCU and some of this, strategic path and growth that you're going through. But I guess the $1 million question that I wanted to ask you was, and again, I'm going to use kind of a poetic license here, but you've gone from community banking to credit unions. Some people might say that's the dark side. You've now made that transition, and DFCU is kind of creeping up on 10 billion. It's a sizable credit union, especially in Michigan and beyond. How has that transition been, being in community banking so long to getting into credit union? What was the change maybe you were most prepared for and least prepared for, and how has it been overall?
Yeah, I think, Brian, the way that I looked at it is, there's a lot of similarities in financial services. So DFCU Financial is a full service organization. Part of our strategy around growth has been to diversify into commercial. But this organization was built on the backs of consumer banking, wealth management, specifically investment services, and now our much broader entry into commercial banking. So I think from a preparation standpoint, we're still doing all the things that I've been accustomed to doing, which is how do you move business lines forward where you're focusing on the best interest of all the key stakeholders. The thing that was probably maybe not necessarily unexpected, but it was something that required some effort, was building a new network. So, having been in banking for my entire career before I came into the credit union space, while both are still providing financial services, they're two different industries. So it was rebuilding many of the connections that I had built in banking with new credit union constituents, whether those were peers, whether those were organizations that supported credit unions, whether those were different kinds of consulting operations, et cetera. So that's been one of the biggest lifts, so to speak, is you're in banking for multiple decades, you get into something new, and you're the new person in the industry. So how do you start to build those relationships and build a group of people around you that you like, trust, and respect that can help you integrate and have people that are good sounding boards and people to strategize with, knowing what are the key things to be a part of, what conferences to attend, which ones to skip, et cetera. So those are just two of the observations of many.
Yeah, and what I'm hearing is, the people that you surround yourself and the teams you've built, that skill set alone is completely transferable between the two. And I guess, you came from a little bit more of a retail world in larger bank land. And of course, it definitely seems to plug in well into what we historically known credit unions have focused on. So let's talk a little bit about DFCU and its focus, its strategy, which, newsworthy over the last couple of years since you've landed there. You had First Citrus Bank, an acquisition of a bank in 2022. You acquired Midwest One's Florida branches last year. And then this year, you acquired Winter Park National Bank. I mean, that's a heck of it's almost 3-year span of strategic growth. Tell us about where that came from and where you're headed.
So the credit union knew that being in Michigan and having 4 areas of operation in Michigan we were in a moderate growth market. So we knew that we wanted to expand the organization, felt that all the good work that the team had done, the financial foundation, the strength that we had, that we were capable of taking this organization into additional states of operation. So we started to look at where were some of these higher growth markets that we could capitalize on. Florida was always at the top of the list. And there's a couple different reasons. One is while there's a large geographic distance between Michigan and Florida, there's more connectivity than people might think. So we find that we have a lot of people who retire from employment in Michigan that have done business with us that then move to central or west or southwest Florida. We find people have second homes in that area. We find people vacation there. We find that many of our members have relatives that are there. Maybe their parents have gone down to the Florida market. So we really felt like there was a good connection of how do you move into a second state of operation, but still have it tied directly back to how you've built the organization over time. And that's really what the catalyst was. We also knew that we wanted to diversify into commercial banking. So as I mentioned, this company, which has been in existence, next year will be our 75th anniversary, we have about 250,000 consumer members that do business with us. But we had a very, very small commercial banking portfolio. A couple of years ago, it was 35 million in totality. Now we're pushing 800 million in our commercial banking portfolio. Some of that has come through these two closed acquisitions that you referenced. Some of it's come through new businesses, organic growth, the hiring of a new team. We probably had a half a dozen or so commercial banking people in our department 2 years ago. Now we're at about 75. So this was the next evolution in the company, which was strong in retail, strong in investment services, but looking to find additional sources of revenue. And we believe that with the right talent, which has been coming to us through these acquisitions and the hiring we're doing, we can really be a top performing organization in really all three segments of the business, which has been the strategy.
Well, that's terrific, and yeah. So those snowbirds that you're describing is a part of this growth. We've had on Travillian Next, we've had Brad Bolton, the past ICBA chairman. We had Mike Bell, who is a Michigan resident who I think moved to Florida and I think has maybe helped on some of your deals. He's an attorney for
Every one of them.
Yeah, every one of them. He's like the guy in the space. I'll make sure I send this to him. Also, we've had Jeff Cardone, who's done a lot of work in the credit union bank space as well. But it has been a little bit of I don't want to say sore subject or hot topic, whatever you want to call it, a little bit controversial for a few different reasons. The tax ramification is one. Now that you're on the other side of this, and Alaris and Regions acquired banks when you were there. How do you respond to that criticism? Give us your perspective.
So, I always go back to free market type mentality of, deals happen when the right situations arise and you find the right fits and all the different aspects that go into evaluating these transactions come together. I think, if you look at some of the facts associated with this, if you look back, 10 to 12 years, there's been several thousand bank mergers. And I think there's been maybe 100 or less of these credit unions purchasing banks. So I think, the large propensity of deals are still bank to bank. But I think what's probably most interesting about this is really getting the feedback from the community bank sellers. Why are they interested in partnering with whether it's DFCU or some other credit union? And I think a lot of the things that we hear are around continuity of leadership. For us, when we go into a new market and we look at a bank acquisition, we actually want the leadership to stay because we are there to build this over a long period of time. Up to this point, we haven't had any transactions that have overlapped. So these are all new market entries. So many of these leadership teams want to stay with the organization on a go-forward basis. They're interested in how do the values fit together, and there's a lot of consistency in terms of how a credit union wants to go to market. Their focus on the the customers, the employees, the ability for high levels of both client and employee retention, the offices staying open to do business. So I think there's a value proposition there that many of these community banking CEOs and their boards are finding, that a credit union is a logical choice for them. Certainly everybody wants a fair price. That's obviously comes up, but the transactions that we've been involved in, these organizations are not just talking to credit unions, they're also talking to banks. And they're evaluating for all the constituents what is the best outcome based on us finding a partner. And I think that's why we've been successful in the transactions that we've done, is we're finding the sweet spot of the things that matter to them. And then they're ultimately choosing to do business with us. Banks are sold, they're not bought. So the same concept has been in existence for a very long period of time. The criticism or the skepticism that comes up about should these deals happen at the frequency that they're happening, et cetera, there's certainly advantages to being in a credit union space, but there's disadvantages as well. We have to pay for these transactions cash only. So retained earnings, things that we have earned, is the only currency we have. We have no stock. We can't make that type of an offer in the open marketplace. We've got field and membership restrictions. So I think there's strengths in both industries. I've been in both, as you've mentioned, but I've always focused on, it's our opportunity to win business, to take advantage of opportunities that exist. There's enough out there for institutions to all be successful. And anytime that there's something that's holding an organization back from a performance standpoint, I don't think it's the environmental issue that pops up. It's more of an execution and something internal that's creating any type of resistance or obstacle to achieving whatever an organization wants to achieve. First Citrus, for example, when I talk about the retention, we're 2 years post-close there. Every branch manager has stayed, every business banker has stayed, every leadership team member has stayed and has a bigger job, with the exception of the CFO who decided to retire. But that's really one of the greatest successes that I see from the transaction, is we had high levels of retention. We're performing in excess of what the pro forma was, but the people are happy. They're finding that the integration with the new company is helping them do more for their business customers as well as their consumers that didn't have a real robust set of solutions on the retail side. So, these are all thoughtful transactions that go into place, but it's really all about culture and aligning with what are the expectations of the team that we're bringing into DFCU, and how are they going to fit with us going forward.
So, yeah, and I was going to ask you about the attrition of your customers, or actually that must have been something for you to pin down, saying members and not customers, right?
That probably gets back to the biggest challenges.
Yeah, right. But I guess you have not noticed attrition there.
Because it starts with the retention of the people. So, there's no 100% successful M&A integration. I mean, there's always challenges because systems change and there's different nuances. But the reality is, if there's continuity around the people, their day-to-day contact, there's continuity around their branches, and there's continuity around the leadership in the market, then the customers are going to look at that transaction and say, okay, I think this is going to be just fine. Because even if there is something that pops up, they know that they've got the trusted contact that will help them resolve it. So the biggest challenge in all of these transactions, whether it's credit unions and banks or banks, it's all about the continuity, and it's the retention of people. And that's really where that fork in the road is going to push it towards a success or lack thereof. So attrition is tied, in my mind, directly to the people that are remaining, and it puts an accountability on the acquiring organization to really vet and look at all of these operational transitions and do the absolute best job that you can in testing it and looking at product matching and all those different things. Like I said, it's imperfect, but if you work really hard and you plan properly, you can have a very, very good outcome. And I think in our particular case, the financial outcomes of the two transactions so far that we've closed has exceeded what we thought it would be. But it's the same thing that drives both of them. It's the talent staying on board and feeling good about the new organization and energized about the future. That'll come across to the transitioning customers.
I was just thinking the F in your credit union's title. You can tell people that stands for Florida, I guess, right? Instead of federal. Nonetheless, going back to that piece about talent, I mean that last response. Talent was, every nuance of that response I could sense was about people on one side of the counter and the other side of the counter, right? And since we've known each other for 6 years, I know that you're someone who's connected talent to me that might be looking for roles. You've always been a great sounding board when I know people have maybe worked with you in their career. So I wanted to ask you just a little bit about, in this role, how do you prioritize mentorship and professional development across your organization? It's the key to retention, right?
So, Brian, one of our strategic initiatives for our 24 plan was to enhance our talent management process within the company. And we were successful in doing that and had valuable meetings with about 2/3 of our constituents in the company. And those interactions were separate from an employee review, performance assessment. This was really about what's important to them from a talent and growth perspective. Where does the company see them? What are our particular needs that we see in the short run and long run? What are some of these leadership attributes? Where do they fit in that scale? So that we were then able, as a leadership team, to really assess the state of the talent within the organization. And as you can imagine, certain assumptions that people had about where people fit or where they stood, they may have not been exactly what they heard this time around. So I think, one, you've got to have a formal process within the organization to really understand where people are in their career mindset. And you have to have that transparency and open communication based on what some of their aspirations are to tell them, look, you're on the right track. We see this. Here's how together the company and the employee can work together to allow you to achieve those expectations. Or we think you're off track and here's why. Here's something you need to work on, or here's potentially a better fit. So I think it really starts with, having a process that you support at the top of the company. And what we also implemented was a quarterly assessment of the progress that we're making around those development strategies. Sometimes you can do a great job once a year on talent management, but there's so many things that you need to follow through on over the course of the year. So we have designated time every quarter at our executive level to discuss. We wanted to recruit for this job. How's it going? We needed to communicate with this person about what their plans were. Did we do that? We wanted to send so-and-so to this development opportunity. Did it happen? What was the feedback? So we have those checkpoints along the way so that there's follow through on the structure that we've put in place. So I think it starts with that. And if that's something that people see on a strategic plan, they hear me talking about it as well as our other executives, then they're going to know it's important. And with it being important, people realize that they have a bright future with the company. And it's perfectly fine if they're status quo, contribute in place. This is what I want to do. But we want people to have a opportunity to share what's on their mind, because we always have people who evolve and people who change. People are willing to now relocate from Florida to Michigan or vice versa. So, we've got that open opportunity, at least annually, to hear from our people and to communicate accordingly.
So that's great that you're kind of meticulously kind of pushing people along and making sure that the middle managers are continuing to develop their high potential individuals. John Corbett, who runs South State Bank, I'm sure you know the name.
Yep.
He told us that he looks for humility and hustle, which I love those terms. What do you look for in someone who could be that high potential individual?
Enthusiasm and a willingness to listen and learn. Those are the two things that really pop in my mind. I think there's a lot of times that giving somebody an opportunity when maybe they're not the absolute best person on paper, but you feel like their willingness to go over and beyond to professionally develop and the enthusiasm that they bring, often those become even better employees than somebody who has maybe done that in the past because they possess that kind of ambition and drive. So those are the couple things that really pop up in my mind that I look for, and many more times than not, that's paid off in talent decisions that I've made through the years.
I always think about pride. If you have pride in who you work for and what you're doing, that to me is so important. I think that's all enthusiasm, right? That goes hand in hand. So my final question is about mentorship, and I want to know, who was your greatest mentor over your career, Ryan?
Yeah, when I think about it, it more falls into a multitude of people, and I think there's different people that you interact with at different times in your career. And in my mind, the best mentors are people that are willing to give their time, share their experiences. I like the question that Gallup asks in some of their employee engagement surveys about that best friend at work, and somebody who can relate to what you do, who understands what it's like to have a good day or a challenging day. Do you have those types of resources? But I've always tried to build a leadership persona around observing multiple people and thinking through, well, how did that go for them? What can I learn from the way that interaction went and whatever they were dealing with? Was it a public speaking type of scenario? Was it a coaching opportunity? Was it something around strategy? How was it received? So I would say that, I've kind of built my philosophy based on, number of different people. And it's not just an individual. It's maybe, gosh, I like three things from that person, not necessarily these other two, but I like the two things from that person, and kind of have molded that all together. But it's really, I mean, if I think back to people, it's people that you trust, that have your best interest at heart, that are willing to give you feedback and give you alternative opinions and so forth. But it's really about, is there a level of respect for the way that they carry themselves, for the way that they lead, how they treat people. And that's, I think, early in my career, what I was fortunate to have. And it's really moved throughout my entire time in financial services. I've been fortunate to work for and with a lot of really good people who have shown an interest in me and have cared about my growth and development. And that's really all you can ask. The rest of it then falls to your own responsibility. That's all you can ask, is to get opportunities, and then you need to just take advantage of them and do the best job you can.
Well, I appreciate that response, and it reminds me, if you're like a film director, it's all about the influences, right? That kind of mold how you kind of make your own movies, and that's in a way what you're saying. On that front, sorry, bonus question: what is your favorite movie?
Fever Pitch, the baseball
Fever
movie.
Pitch,
Yeah.
the one with Jimmy Fallon and
Yeah.
Drew Barrymore.
Yeah. Big baseball person sitting right here and all over the country, seeing games, going to events. I think I'm up to 21 or 22 of the baseball stadiums right now in the
Wow.
major leagues. So there's not a vacation that we do that somehow doesn't at least start to think about, is there a baseball connection? So that's the one that pops up, because that's a big part of the life.
I have to revisit it, but I remember feeling like that movie was really charming. It was very funny, and it was like an ode to baseball for sure. It was more of a Red Sox movie,
It was a
right?
Red Sox, yeah.
Yeah.
I'm a big Braves guy, so you can replace the Red Sox with the Braves for our focus, but that's the one that jumps to mind.
Well, you are talking to a Phillies guy, so I think you just got
Well, and you and
demerit
you
from me.
you've outdone us the last few years, but
Yeah.
there's always another season coming up.
That's right. Well, Ryan, on that note, I wish you and your family and your DFCU family a wonderful holiday season. I thank you so much for your friendship over the years, and really, really thank you for joining us today.
This was real enjoyable, Brian, and I wish you all continued success. And thanks for your interest in our company and inviting me today.
You bet. Thanks, everyone.